Okay, and welcome back, students who are taking financial accounting, and we're still working on the theory videos for Chapter 2, which is analyzing and recording business transactions. We left off in the last video talking about the statement of retained earnings, and so we're almost into the home stretch here for theory videos, in that all we have left to discuss is the balance sheet and the actual accounting cycle itself. So let's pick up where we left off. And in the last video, we had created the statement of retained earnings and talked about the formatting of that statement. Okay, and now we have this ending retained earnings for the accounting period. In this case here, it's the month ended January 31st, and we're going to move that $900 from the statement of retained earnings. Okay, and that allows us to create our balance sheet and bring the accounting equation back into balance, right? Why do I say that? Well, aside from creating the financial statement here, if you notice that I have 2310 as my total assets, and I have 12,200 for my total liabilities. If I don't have this $900 figure here for retained earnings, my equity is only going to be 10,000. Okay, well, 12,200 plus 10,000 is 22,200. That is not equal. That does not equal your total assets. So we have to bring that ending amount for the retained earnings and put it into our equity section of the balance sheet to give us the 10,900, so that when we add 1212 plus 10,9, that gives us 23,100, which is equal to my total assets. So you can't create the balance sheet until you've actually created the statement of retained earnings. And by transferring that information, that allows your accounting equation to come back into balance. Because assets, an inviolate rule is assets has to equal liabilities plus equity. Okay? Now, formatting of the balance sheet. I just wrote assets is equal to liabilities plus equity. Well, if you notice, right down, draw down the middle, assets are on the left, right? Equity and liabilities and equity are on the right. So assets equals liabilities plus owner's equity. Now, this here is this is horizontal formatting, okay, where you're showing the information across the page like this. It is possible to have vertical formatting, which shows your assets first, then your liabilities underneath it, and then your equity underneath it. So you'd have like a total assets here, and then you would have your total liabilities and equity here, okay? And that's a vertical format. That is used, but it's less common, and there's nothing wrong with it. But for the most part, you're going to see your balance sheet represented in this horizontal format, which has your assets on the left and your liabilities and equity on the right. Now, when creating the formatting for the balance sheet, again, the heading is centered. You put the name of the company, the name of the financial statement, which is a balance sheet, and for the date, okay, you have to have a heading date. You can either write in just the date like it is here, or you can write as of that date. Okay, and as I expressed before, I like using the as of because it connotates, it's as of this specific date. Okay, whereas just having the date, somebody who doesn't know how to read the statements that well might think that these are the balances in the accounts, for just that date itself and not since the inception of the business. Because remember, on the financial statement, it reflects the financial position of a company from, the opening of, from when it first got started all the way up to that specific date. Okay. So we're going to write, and remember, just like in the income statement and the statement of retained earnings, it's a process. I follow the same process all of the time. Okay, and the process for all three are basically the same. You know, if I'm going to have a mathematical calculation, you know, I want to go one column to the left and put the total in the right. Okay, I'm going to have underlines, double underlines. I'm going to have indentations where applicable. Okay, you know, pay attention to your spelling and you know, capitalization. Okay, you do not abbreviate. I mean, you see me always writing accounts receivable like this or accounts payable like this. Okay, on your financial statements, you have to write those words out. Okay, always have a dollar sign as the first number in the column, and when you have a total that's followed by a double underline, you put your dollar sign. Okay. These are standard conventions for the correct formatting of financial statements, and even though they seem silly, you know, if you were taking accounting to become an accountant, you'd see the value of them. But for most people who are business management and marketing, you know, they don't have to take intermediate accounting, and so it may seem like this is just, you know, silly, but there's reasons why these are put where they're at. And since we're only in financial accounting and it's a 40,000-foot view, you know, just take it for what it is and just do it. Okay, because if you don't need to know why you have to do it. You just need to know that you have to, and if you don't, you'll lose points. And if you're in the workforce and for some reason you have to create the financial statement, you know, if you're wrong, there's legal liabilities involved. Okay, all right. So after I write the heading, then the next thing I like to do is write my category of accounts. Right. So I like to write, you know, assets, liabilities, and stockholders' equity, and notice that they're center aligned also. Okay. After I write the categories, then I write the accounts themselves, right? And at that point in time, I can go back up to my trial balance and start pulling that information off the trial balance. Notice my cash, my accounts receivable. Notice these balances. There's my payables, note payable, and my common stock, right? Now remember, no retained earnings because, you know, right now we only need these accounts. And I come down to my balance sheet and I write those account names, okay? And if I want to, I write in the balances, right? And once I've written in the balances, now I'm going to figure out the totals. So I write in my total assets, draw the underline, and do the math, have a double underline, and have the amount. Okay, that's what the balance sheet side should look like. That's what the asset side should look like. For the liabilities, okay, I have two accounts, and I'm going to have a mathematical calculation to get my total liabilities. Notice that that's indented. So I end up with 12.2. Now, this financial statement is single step. Okay, and if you watched the previous video, you'd see what I mean by single step. The authors are trying to keep it simplistic. But if you were paying attention to what I was saying, I'm more of a fan of whenever there's a mathematical calculation like this, that I'm going to use a left column and a right-hand column. In the leftmost column, I would write the 200 and the 12,000, and then just put the amount here, so I wouldn't have this information here. And the reason why is because this would show me my liabilities, and then when I'm down here in my equity, you know, these would go in the right-hand column also. 10,900. I draw the underline and write that amount in here, so these amounts wouldn't be here. So when I'm looking down this column and I'm going to add my total liabilities and total stockholders' equity, when I'm looking down this column, I'd see the 12,200 and the 10,900, which would give me my mathematical calculation. I would draw the line and do the math to get 23.1. So using multi-step, okay, it's easier for me to see that, my total liabilities here are the 200 and this 12,000 to give me 12,200. And it's easier for me to see that my total equity is 10,000 plus 900 to give me 10,900. And then it's easier for me to see that my liabilities plus my equity equals the 23.1 for my total liabilities and stockholders' equity. It's easier for me to see it in that fashion. Whereas in this fashion here, by making it single step, okay, as I'm looking down through these numbers, I actually have to, I have to hunt for this 12,200. I have to mentally hunt for 10,900, knowing that liabilities plus equity is going to be my 23.1. But I have to look for those specific numbers. Now, sure, this is relatively easy because there's a few accounts, right? But once this gets a lot more complicated, it's going to be a lot more difficult for me to find those numbers. Okay, so just realize that along your line of education, this is single step, and realize that single step is generally used just for relatively simple financial statements. But once you start getting a little bit more complicated, use multi-step, okay? And just get used to always doing multi-step, okay? On an exam, they're not going to ask you whether, to create a single step or a multi-step. Okay, they're just going to say create the balance sheet. And in the workplace, the accountant will determine whether it should be single step or multi-step, and 99% of the time they're just going to use multi-step right off the bat. So if you needed to create your own balance sheet in the workplace, you could just look at the previous balance sheet and see what the formatting should look like. Okay, which now leads me to it caused me to think about the graded project. When you get to the end of chapter 3, you're going to have a graded project, and you're going to have to create financial statements. You're going to be given examples of the financial statements. They don't look exactly like this retained earnings, this income statement, or this balance sheet. Okay, they're slightly different. Okay, when you're doing that project, use the formatting of the financial statements that you were presented with. As long as they're correct, you don't have to change it. And of course, that information is going to be correct when it comes to the project. So follow that formatting. Don't go and create your own formatting. If you have if it's being shown as multi-step, use the multi-step formatting. Don't go creating single step. All right. If you do, you're going to get it wrong. Because why? The business wants to see it in multi-step format, and that's the way it needs to be. So you'll lose points for that. And in the workplace, they'll make you change it. Put it the way it's supposed to be. Unless you're the accountant, and you can, you decide the way you want it to present the information. But again, most accountants use multi-step. So this balance sheet is shown as single step, but I scribbled on here letting you see what multi-step looks like. Okay. And so, like I had said, we're going to pull the $900 off of the statement of retained earnings and plug it in here so that we can do the math in order to make sure that our assets equals our liabilities plus our stockholders' equity. If for some reason let's say your debits didn't equal your credits, and you get to this point in time, your accounting equation is not going to balance. And if you think that you're just going to plug in 2310 because that's what your assets are, but yet these numbers don't show up, don't support this 2310, then what you're doing is you're cooking the books, you're fudging the numbers, and that's grounds for getting a grade of a 1. Okay, because that's just ethically unacceptable. Okay, morally unacceptable, and it's just that's why you have double entry bookkeeping. Right. So I hope that makes sense, and this here is the end of the financial statement. So if you have any questions, watch these videos again. Hopefully it made sense. I know I talk fast and I throw a lot of information, but hopefully I'm repetitive enough so that you can keep picking it up. But if not, pause the video, watch it again, and then if you still have questions, feel free to contact an instructor. I'm only going to have one more video left, and that's going to be on the accounting cycle, so I will see you in that video.